Good evening, friends. Welcome to Adda 24/7. We are in selection MCQ series for Central Banking Elective. Okay, and today's topic is role of RBI in digital lending. Now, understand, digital lending has come up a long way now. Means earlier, what used to happen? Okay, let me first start the topic, then I'll explain all these things. Okay, so firstly, everyone follow the video completely. Okay. Now first understand the logic behind this. What is digital lending and why RBI is focusing on that? The important point about this is, suppose earlier, few years back, means 15 years back roughly, suppose if you required the loan, where did you used to go? Only to banks. Okay, banks. So banks used to give you the loan. That was the only source available, official source available. Unofficially many sources were there. But nowadays, and at that time also NBFCs were there, they were giving you loans, but the rate of interest for NBFCs was huge, high at that time. Okay, but now what has happened? Banks, then NBFCs. Now NBFCs are all of various types. Okay, some are physical NBFCs like Muthoot Finance, right? You see all those Muthoot, Sriram, all those finance, right? Sriram, all those finance. So these are physical branches. Then there are other NBFCs who don't have branches. They give you loan directly only. Means only on app. Which is that? Anyone knows? Paytm, Karo. What is this Paytm? Phone Pay. What is this Phone Pay? These have become a new NBFCs now, new age NBFCs. These are all old age NBFCs. So these apps, Paytm, Phone Pay, they give you loan directly. Without anything, without any branches. Where is the branch network? Do you know any branch of Paytm or any branch of PhonePe? No, right? So that's what. So that the reason behind this is, as the other NBFCs have grown along with the banks. So these are called as e-lenders. So along with the banks, and they are competitive in the rates now with the normal banking structure. So that's why RBI is what? RBI is not only the regulator. Remember, RBI not only regulates banks, but it regulates banks, NBFCs, any institution which takes public money. It's as simple as that. Any institution which takes public money in any form. Okay, so that's the role of RBI. So that's why the role of RBI in digital banking is very important now. These guidelines are applicable to digital lending by all commercial banks, all primary urban cooperative banks, state cooperative bank, district central cooperative banks, non-banking financial corporations, including housing finance. So NBFCs include this PhonePe and Paytm also. Remember, what is NBFC? Non-banking financial corporation. So financial corporation. So Paytm is a financial corporation, right? So all these become under NBFCs. Even if some insurance company, remember, understand the logic. If some insurance company is going on for lending now, that will also come under the scope for this section, specific section. Okay. So coming back, all NBFCs, even insurance companies, after all, what? It's an NBFC. Okay. Coming back, chalo. Let's move on with the topic. So including housing finance companies. See this, housing finance companies, for example, HDFC Housing or SBI Housing, they take deposits also. So they are taking money from the public. So that's why they come under the scope of this RBI. Okay. What is APR? Annual percentage rate. APR is the effective annualized rate charged to the borrower of digital loan. APR shall be based on all inclusive cost and margin, including cost of funds, credit cost and operating cost. Now understand, this APR concept you mainly get in credit cards. Okay, there you get this concept of APR. What is APR? Okay, let me keep it very simple. Okay, in the loans for credit cards or even some personal loans also, what do they tell you? Sir, our rate of interest is only 3%. Only 3%. So what does it mean? You assume that it is 3% per annum, but no. It is not 3% per annum, it is 3% per month. So what does APR become then? Per month it is 3%, so into 12. So it becomes 36%. So that's why APR means what? Multiply per month rate into 12. That's APR. Okay. So APR is the effective annualized rate charged to the borrower of digital loan. Okay, digital loan means what? Not only digital, any loan. Even if you give some physical loan also from the physical branch stating that 3% per month, then you have to calculate that APR. Got it, everyone? APR shall be based on all inclusive cost and margin, including cost of funds, credit cost and operating cost, right? Cooling off or lookup period. What is cooling off period and what is lookup period? A cooling off or lookup period is a time window as determined by the board of RE. What is this RE now? Okay, RE means regulated entity. What is regulated entity? RE. It is regulated entity. Regulated entity. What is RE? So it includes banks, all the banks, cooperative bank, commercial bank, any bank, private bank, then other NBFCs, all NBFCs are included, all e-lenders are included. NBFCs means it includes e-lenders as well as physical lenders, okay? So, cooling off period is a time window as determined by the board of the RE which shall be given to the borrowers of existing digital loans in case the borrower decides not to continue with the loan. So if the borrower wants not to continue with the loan, means that borrower wants to close that loan. So that will be the cooling off or lookup period given. Means what? Suppose if I take a loan from some company, okay, so they tell me in that condition that within 15 days if you give back this loan and don't accept this offer, then we won't be charging you anything. Okay, so that is called as lookup period. We have this lookup period for insurance also, isn't it? Any insurance policy you take, you always have this lookup period. Lookup means in that period I decide whether I have to continue with this whatever agreement I have done, or whether I have to change it. Okay. Digital lending, a remote and automated lending process. Now remote and automated, understand this, remote and automated means what? There is no manual interference in this. Remote, no face-to-face customer, right? Lending process largely by use of seamless digital technologies for customer acquisitions. Now many of you who are bankers who have not seen digital lending might feel that this digital lending, digital technologies might be for some loans of, let's say, 30,000, 40,000, 50,000, 50k. But no, digital loans can be given up to 10 lakhs also. Many banks give the loans up to 10 lakhs digitally online. No face-to-face interaction. Okay, so largely using seamless digital technologies for customer acquisition, credit assessment, loan approval, disbursement, recovery and associated customer service. So digital lending means everything is digital. It includes this assessment, acquisition, acquiring the customer, that is also done through phone call. Assessment, checking the CIBIL score. Mainly digital lending is given based on CIBIL score only. No physical documents are required. Loan approval, okay. Disbursement is done online only into the bank account of that customer. And associated customer service means whatever service is to be given to that client afterwards, that is also given digitally. No physical branch, okay. Digital lending apps or platforms, DLA they call it. What is DLA? Mobile and web-based applications with user interface that facilitates digital lending services, right? So what does it mean? Mobile and web-based applications means it's on the mobile also, on the PC also, computer. Web-based means PC. So both I can serve the customer. Do you know any digital lender? Don't know? Okay. SBI credit card. What is this SBI credit card? Have you seen any SBI credit card loan up till now? How many of you can tell me SBI credit card gives you loan on how does it give you the loan? Do you have to visit the branch of SBI credit card? No. Right? This is one of the biggest digital lenders in India today. Credit card. One of the biggest digital lenders, SBI credit card. Everything is done on phone. You have a SBI card and you are a regular user. Everything is done on phone. You get a loan immediately. Online. Nothing going to the branch. No application. Nothing. Only on phone. rates comparable to this to those in the banks. Okay, roughly half or 1% more. So that's okay, isn't it? So that's why many customers get it immediately. That's why who will go to the branch then? And the loan amount of these cards is not that simple, means not that small, 50,000 or something. They give you loans up to 5 lakhs and 6 lakhs also online. Okay. Lending service provider, LSP, an agent of a regulated entity who carries out one or more lenders functions or part thereof in customer acquisition. Now what is this LSP? An agent, basically an agent. Okay, agent means what? Like we have those LIC agents, like we have DSAs, same logic. Who is the DSA? DSA is also an agent. What is the BC? Business correspondent. He is also an agent of the bank. Similarly, LSP, an agent of a regulated entity who carries out one or more lenders functions or parts thereof in customer acquisition, underwriting support, pricing support, servicing, monitoring, recovery of specific loan or loan portfolio on behalf of REs in conformity with extant outsourcing guidelines issued by the Reserve Bank. So what do you mean by this? It's just an agent. That agent works for customer acquisition, acquiring the customers. Okay, that is also done through online only. See, this LSP does not contact the customer physically. It's online only. Number one. Underwriting support means, underwriting means what? Suppose it's a basically a risk taking part. Okay, underwriting means it's a separate business altogether. Underwriting means what? If you bring a loan proposal of, let's say, 1000 crores for various customers, so I give you a guarantee that your full 1000 crores will be disbursed by me. I'll find the customers. That's underwriting. Pricing support means what is the pricing going on in the market, how to establish the pricing, servicing, monitoring, recovery. So everything is carried out by this agent. So that is known as LSP. Okay. Before going ahead, download Adda 24/7 app on your mobile. In this app, you will be getting the premium study material plus live classes, ebooks, tests, everything you will be getting. So download it right now, because exams are when? Just 2 months now, not even 2 months. So immediately download it. Loan disbursal, servicing and repayment. So RE shall ensure that all loan servicing, repayment, etc. shall be executed by the borrower directly in the RE's bank account without any pass-through account, pool account of any third party. Means what? As I told you, SBI card. Suppose if SBI card is giving me a loan, card I'm not talking of SBI bank. Okay, SBI card is giving me a loan, so it will directly disburse it into my bank account. Okay, it won't disburse it through some SBI account, then it goes to my account. No, nothing like that. Directly to my account. So shall be executed by the borrower directly into the RE bank account without any pass-through or pool account. So no pool account. This is known as pool account, where I deposit all the loans and then I give it to those kind. Why this agent is required in between, or third party is required? Third party account is required in between. Directly from bank to this account. That's it, isn't it? Let's come to the questions now. Okay. Central bank can pursue their set goals under the following conditions of financial independence and operational independence, policy independence, both A and B, government surveillance. So central bank means basically RBI. RBI can pursue their goals under the following conditions. Means how can RBI work? If government constantly checks it. Okay, what are you doing? No. What are you doing? No. Will this central bank or RBI able to function? No. It should be given an independence. Policy independence means what? If central bank must decide on their own what is the best for the country, what is the best for the banks, what is the best for the financial institution, right? So it should be what? A, B, financial independence and operational independence. B is policy independence. C is both A and B, or government surveillance. So what do you feel is the right answer? A, B or C? What do you say? Right answer? It should be obviously A and B, isn't it, combined? Because financial independence and operational independence along with policy independence, if this independence is given to the RBI, then only it can function properly. Otherwise it will be just a caged parrot and government holding the cage, right? A number of studies have been carried out to evaluate the economic implications of the central bank independence. These studies typically estimate the economic effects by first deriving quantitative measures of relative independence of central banks and then estimating how these measures are correlated with the following variables. So what are these studies for? These studies are mainly for these parts. Basically the full paragraph given over here means what? What are the parameters for central banks functioning? How do I decide whether the central bank is functioning properly or not? That's the full meaning of this full paragraph. Okay. So what are the parameters? Average inflation, inflation variability. Okay. So average inflation and inflation variability. Real economic performance. Interest rate variations and D, A and B. So how will this means it will be decided whether this RBI is functioning properly or not? How will you decide it? On what basis will you decide? Will you decide on average inflation? Yes, RBI's role is controlling inflation. That's the main job of A is always a job. Inflation variability, that's also a part. Real economic performance means GDP. Okay, GDP growth and interest rate variations. Now interest rate variations are not in the hands of any company. Means if the bond rates go up, bond rates go down, it can't be done. RBI can't do anything in that. Why? Because these are decided by market forces. Means here, I'll give you a simple example. Russia-Ukraine war happening. So because of that, what is happening? The interest rates are going up and down. Okay, usually up they are going right now. So if the interest rates are going up because of that Russia-Ukraine war, what can RBI do in that? Can RBI stop that Russia-Ukraine war? No. Right? So that is the point. So what all RBI can do is RBI can try to control the inflation using its monetary tools, CRR and repo. Okay. Then real economic performance means GDP. Now remember one simple logic. If RBI increases the rate, remember, if RBI increases the rate, okay, increase rate. If RBI increases the rate, then what happens? The inflation comes down. Okay, but along with inflation, growth also comes down. GDP comes down. That also comes down. So that's why increasing the rate will have a positive effect of inflation being down, but it will have a negative effect of GDP. So that's why a real economic performance. So RBI has to balance between this inflation and GDP. It shouldn't happen that inflation is too low. In fact, remember, too low inflation is also dangerous for a country. Too high inflation is also dangerous for a country. So it should be balanced. Balanced in the sense, inflation should be balanced with the GDP. Both should go hand in hand. There should not be too much GDP growth also. If in any year there is huge GDP growth, then also it's a problem for the country. Where will you sell if you have huge GDP, right? Before going ahead, subscribe to Officers Adda 24/7 YouTube channel. In this channel, you will be getting the latest updates on JIB and CIB, number 1. Number 2, you'll get all the free YouTube series. Right now, what are you watching? You're watching the same free YouTube series. Where are you watching this? You're watching on Officers Adda 24/7. So, subscribe to the channel, click on the bell icon, because you want such free YouTube series on all subjects, isn't it? All the subjects of CIB, you want it now. So subscribe it, click on the bell icon. Okay. Around the Second World War, most of the central banks emerged as follows. So around Second World War, what happened? These central banks emerged as subordinate to the government, independent of political control, private entities and institutions of policy independence. So these central banks emerged as what? What do you think? What do you think these banks emerged as? Subordinate to the government? Means they supported the government? Yes, that was the point. They supported the government. Because here in any country, government can't function properly if it does not have the support of RBI or that central bank in that country. Both should go hand in hand. Okay, so that's why subordinate to the government, that's the important part. Independent of political control. Of course, yeah, this is but obvious. This is the part that it should be independent of political control. Private entities, it's not a private entity. Central bank is never a private entity. It's always owned by the government. Even RBI's complete control is with the government. Shares of 100% are controlled by the government. Institutions of policy independence. Policy independence means what? It should have an independent policy, but it should be in support with the government's policy. See, our government always gives the fiscal policy, fiscal, and RBI always gives the monetary policy. So remember, monetary policy should support fiscal policy. This should be supporting. Okay, monetary policy itself is nothing. Okay, without fiscal policy. Got it, everyone? Central bank accountability implies holding central bank responsible for. So, what is the main job of central bank? Monetary policy actions, maintaining good fiscal relationship, reducing volatility in exchange rates, and implementing KYC norms. NORMS. It is norms. Okay. So, how do you decide whether any central bank is working properly or not? Here, implementing KYC norm, that's a basic role of supervisor, isn't it? Then reducing exchange rates, that is also here. That's not in the hands of any central bank. RBI can decide what should be the dollar rate. If it would have decided, then the dollar rates wouldn't have been that high. Okay, so these two are out. So what? Monetary policy actions and maintaining good fiscal relationship. Now fiscal relationship means what? With the government. So that's but understood. The right answer is monetary policy actions. Every RBI or every central bank will be held accountable if its monetary policies are wrong. If it goes wrong in policy, this repo and CRR, and because of that inflation is affected. So that's why central bank will always be held accountable for monetary policy actions. Credibility of central bank refers to central bank's ability to manage public debt, regulate the money markets, monitor policy perceptions of the public, establishing a track record in maintaining price stability or low level of inflation. So what is this? Central bank, RBI's main job is what? You and me as a common person, how will you judge central bank? You will always judge it on basis of what? A, B, C or D. Let me see the answer. How many of you can think properly? We will judge, common person will judge central bank from what? This policy perception. What a common man understands about the policy. Money markets. What common man understands about this liquid market, money market, G-Secs, everything? Nothing. Public debt. What? Common man only checks it on basis of inflation. How are the low levels of inflation or high levels of inflation? Okay, so common person has to do nothing with all these above three topics. The person is always concerned only with inflation. Okay, now coming to the batches. These batches have just now started, selection batches. 80% off is going on. In these batches we are covering all the 4 subjects: ABM, BFM, ABFM, BRBL. So join it ASAP. In fact, I would suggest, why haven't you just liked up till now this video? Everyone like the video, please. Click on the bell icon, okay, so that you'll get the latest notifications. Okay, let me show you how to go for this batches. Okay, how to join the batches. See this. Go to Adda 24/7. If you are having the app, I would suggest go on the app. In the app, you are getting 1% extra. Okay, go to Adda 24/7. One sec. Yeah. Now we are on Adda 24/7. Click on first the front page. Click on JIB and CIB. Okay, click on CIB 23. Click, you'll see the batches. See this new selection batch. Click on this English batch. You'll see the details over here. All the details means what are the timings, what are the dates, what are the study plans, everything. Okay. Now look at the fees part. Now before going to the fees, remember one important part. You have recorded videos available 24/7. So if you miss out on any class, you can definitely won't lose on that knowledge. Why? Because you can get the recorded sessions. 2 interactive classes are available. Okay, 5279 fees, 78%. But click on more offers, get more discounts. Put the code Y432. Click on apply. Look at this, 80% off you are getting. So 23,999 reduces to 4,799. Such a huge discount you are getting, man. So join it ASAP. In fact, 2 months are remaining. You can join the Mahapacks. In Mahapacks, you'll get, see this, in Mahapacks, what do you get? You get 15 plus batches. See the JIB CIB Mahapack. Click on this. You get 15 plus batches. CIB ka Mahapack. Okay, click on this. You get 15 means 15 plus batches, not a joke. Even if you attend one batch each time, okay, then also 15 times you get a revision. So all the 4 subjects, compulsory subjects, 15 plus batches. Plus in Mahapack you get these electives also. Okay, recorded videos of electives. Now let me come to the fees part again for the Mahapacks. Look at this. 7699. Click on more offers. Put the code Y432. Click on apply. Look at this. 34,999 reduces to 6,999.80. Such a huge discount you are getting. Immediately join it. Immediately join the Mahapack. Okay, I'll be back tomorrow with another session. Till then, bye. Keep studying and join the batches. Offers are going on 80%.